Negatives in Europe weigh on markets. Rumors out that UniCredit has asked the ECB for funding. Bank of England says inflation will rise short-term as growth stagnates. Borrowing costs for Spain and Italy are still near record highs. Italy's prime minister preps to announce a new cabinet. And in the U.S., Dell's outlook and third-quarter revenue disappoints the street. I'm Alix Steele, and the morning call starts right now.
Good morning, everybody. I'm Evan Lazarus, Chief Knowledge Officer here at T3Live.com.
And I'm Alix Steele with The Street, and together we bring you the morning call. Evan, let's get to it. We had markets eking out that gain yesterday. Futures pretty volatile, but pointing to a lower open for now. Do you think that we see stocks resolve this sort of indecision anytime soon, upside or downside?
Well, I think we're going to get a resolution. You know, with the market, you can't really ever pinpoint a day or a time. I can't tell you next Tuesday at 2 o'clock we're going to get a resolution to this range.
You can't? No crystal ball?
No, I can't do that. As much as I would be able to love to, I cannot. If we take a look at the S&Ps here on the charts, you'll see exactly what we're talking about with this range. You know, you have an upper band, you have a lower band. We are coiling. The highs are getting lower, and the lows are getting higher. This means that energy is building, and the market is at some point going to resolve this range, most likely through one of these trend lines, be it up or down. This pattern doesn't really dictate a direction. It is a consolidation here at the highs after this move that we saw through October. Most of November has been defined by just ebbs and flows, no real committed directional movement. As much as one day looks strong, the next day can be weak, and vice versa. So at this point, the market and trading is really for just an active, nimble, short-term trader. No need to commit long-term money here. At some point, the market will give us that resolution, and we'll be able to put some money back to work.
When that resolution comes, do you think it's going to be very violent to the upside or downside? I read some reports saying that we're going to see some major move.
I mean, you can speculate all you want, but we'll just have to take that as it comes. For me, I think it would be imprudent to say something that I really couldn't justify. I think it might be headline driven, as most of the movement we've seen has been headline driven. Whether those headlines will be positive and the market will interpret it positively, to me, remains to be seen.
All right, let's get to, we're headed into the end of the year here, and we're going to have a lot of managers who have a lot of money in cash. They're going to have to put a lot of cash to work to show their clients that they actually own certain stocks. Is that going to provide some kind of support despite the headlines and despite the fundamentals?
I think with, the Christmas effect, or we call it the January effect, into the end of the year, there's definitely going to be money put to work by fund managers, like you said. I think it's a stock selection process now. You got to look at where the money flow has been for the better part of 2011. That's probably where you're going to want to put some money if you believe in that into the end of the year.
Where to put the money? That's a perfect lead-in, because we want to show you some good performers of late to see if they have more juice and to see if that's where people are putting their money. First, let's go to PNRA. We're seeing some price consolidation after a big move after earnings. Does the chart look strong on this?
This chart looks great. I don't think you're going to find a better looking chart. We had a breakaway gap here on earnings. Really a month and a half of consolidation since the middle of October, approaching highs again. That just stone's throw under 140. I think the highs are right around 139. So look for a breakout here through that 139 level. We could see a very quick trade for those that are a little bit more nimble into possibly the 150 zone. That's the next psychological level, I think, here for this stock. But remember, if we look out on a weekly chart, which gives us a little bit longer term here, a little bit more macro, we are essentially at an area where we could consolidate a little bit longer. We've seen a large percentage movement in a very short amount of time. Usually these take some time to consolidate. So for the active short-term trader, keep an eye on the next couple of days to see what it gives us. If you are looking for places where you're looking for longer-term horizons, you might want to step back and wait a little here.
Right. It looks like it was a 6-month consolidation after that big jump over in January. All right. Let's get to Visa, of course, riding high on that. On Buffett saying he bought 2.3 million shares in the last quarter. It's the Buffett effect, right? Obviously, he's not a stock picker, but IBM has been holding up incredibly well.
Visa here,
I said IBM.
Sorry.
No, I'm sorry. I meant Visa.
I understood what you meant. Visa, to me, again, this is a little bit more of a macro time frame. We have prior 52-week highs here, which were made just after early 2010. We're approaching those levels again. That level's right around 97. I think active traders are going to want to look to see how the stock reacts at or near this area. But it looks to me like this stock wants higher. and I would definitely be a buyer through this 52-week high at 97.
I'm going to throw in IBM because Buffett also bought IBM and it's sort of got a nice pop on that. Is the same kind of thing as with Visa?
IBM looks great. There's no arguing that this is the market loves this stock. You know, since earnings, we saw this gap down here. Earnings were, early October. We saw a pretty substantial haircut and just grinding back higher, filling that gap. Keep an eye on these prior highs here just above 190. I'd be a buyer through these highs for a breakout trade, possibly to see that 200 mark.
All right, let's get to some stocks Buffett didn't buy. Let's go to SanDisk, holding up pretty well. Do you think that there's more juice here?
I think there'll be more juice, but I also think that it's a patience trade right now. We've seen a large move. The stock has gone from the low 30s into the 50s in just a few weeks' time. With that being said, we are at prior highs. Let's just sort of mark them off. We could see, a few more weeks of consolidation here. A trade above these highs here would definitely be a breakout and probably take the stock substantially higher.
Now, what about Google? Also been holding up really well. Do you think we'll see new 52-week highs headed into the end of the year, especially as we see kind of Apple, usually the tech hottie, sort of floundering around here? Maybe Google's going to take its place for the fund managers.
The tech hottie.
It just came up.
I've never heard that before. Well, let's take a look at Google. And again, I always like to look at longer term just to get an idea of real support, real resistance. Google here, since earnings had a nice run, we could see another move into the 650 area, which, as you can see here by my upper band, would probably provide some resistance. The stock to me is looking like it can, see that mark in the next, possible few weeks. Hard to say at this point. You could be a buyer. Keep your risk tight. I like Google. It certainly acts very, very well. And I do think you'll see higher prices.
So is this the time for a long-term investor also, or wait for a pullback?
Well, tough to say. I think, if you're a longer-term investor, you want to operate off of these weekly charts, and you could probably wait for a pullback. You got to remember, the beginning of October, the stock was trading 480.
Right.
Now it's trading 616, and that's about a 6-week period. Wait for the pullback.
All right, and let's wrap up this segment with Lululemon. Big move yesterday, but been the laggard of retail. Does it have some catch-up potential here?
It does. Like when we started the segment, we talked about money flow into the end of the year. Retail, in this particular name, has been hot all year. 2011 was a great year for this stock. 2010 was a great year for this stock. Since July, we've seen a multi-week, multi-month consolidation. I think the trade here is through this, downtrend line that it sort of has here on the daily chart. We can get a better perspective of that. That would come into play right around this level. Just make it a little more accurate. Keep an eye on a breakout. That would be through the upper 50s, possibly low 60 area. That to me is where it's a compelling trade. Right now, it's sort of a hands-off and wait.
And you have to wonder if managers are also going to look for, say, the Walmarts and Home Depots instead of taking the risk with the LULU.
Possibly. Walmart, just to touch on that, great move in this stock over the last 3-4 months. Walmart going from 50, we're now trading in the upper 50s. That's a big percentage gain for this stock. So it looks like there's been some money flow into Walmart as of late, trying to resolve out of this multi-year base that it's been in from the mid 40s into the upper 50s. So if it can peak through and see $60, maybe in a few weeks, could be an interesting trade.
All right, and we'll be right back with Apple and some derivative plays and some quick ways to make some cash right after this.
Hi, I'm Sean Hendelman, CEO of T3Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.
Reports out that indicate that the iPhone has now surpassed the BlackBerry as the most used business smartphone. At the same time, though, everyone, we're getting some conflicting reports about iPads slowing sales as well as iPhone 4S slowing sales. They might not meet Apple's expectations. Stock just has not been holding up. Do you think that there's more downside here despite yesterday's little rally?
Well, I think for the first time in a long time, the stock to me is clearly underperforming. Markets are holding in an area where you're seeing a lot of stocks peak into new 52-week highs. In the last couple of days, in particular, you've seen some selling in the stock, which you haven't really seen in other places.
Right.
So kind of an interesting divergence developing here in Apple. I do think we need to keep an eye on how the stock acts in the mid 390 to 395 area. That's probably going to be some resistance in the near term. So goes Apple, so goes the market. It's been that way for quite some time. That's the indicator that I use. This is above being a trading vehicle for a lot of traders. It's a very good indicator. And right now the indicator is telling me that the market, that this stock is having some trouble. It's losing its sort of luster, its steam. Whereas since earnings and since Steve Jobs, you haven't really seen any real committed buying. You've actually seen some selling. So interesting trade here developing, and I think it's something we're going to watch closely over the next couple of weeks.
Right, and Apple might really need some time to sort of reinstill confidence into investors, if you will. And also because of that, you have to wonder, we've been talking a lot about managers buying stocks into the end of the year. Usually Apple's one of those stocks, right? So maybe it won't be this year, which leaves opportunity for other stocks, but also might leave Apple kind of languishing.
Well, I think we'll see. I mean, look, Apple is a tech darling. And there's definitely always going to be money managers and institutional money that's going to want to put money here, because as long as the balance sheet looks the way it is and the products are as hot as they are, there's always going to be that eternal optimism, and the market really does love this stock. That being said, if we go back to the chart for a quick sec, I think it's really good to put it into perspective. Obviously, there's been a lot of money made here over the last couple of years. Since January of this year, the gains have been relatively modest. We're actually, for the better part of this year, you can see where we were in July, May, June, July. We're really in the same place. So not much in terms of gains over the last 6-8 months here. So let's let this story continue to develop. No need to, commit a lot of capital here if the market's not telling us to.
Now, perhaps the good trading opportunities are going to come from some derivative plays. I mean, look at Qualcomm, had a killer quarter. More importantly, though, guided much higher for Q4 and 2012. If you like the Apple story, this might be an interesting way to play it. Is there still more room here?
I think there's room in Qualcomm. Again, it's one of those back from the dead type stories. This was a stock that was, really, the market just had a love affair with the stock in the late 90s, early 2000s, really a part of the tech boom that defined, that late 90s era. Starting to make some gains here at a resistance area. Keep an eye on the $60 level. It looks like it's approaching here. We've seen the stock, have some trouble back here getting through that $60 mark. So I wouldn't be a buyer here at 57 or into the 60 area. I'd wait for actually, it to commit to a breakout.
All right, what about Broadcom? Because it has its chipsets in Apple products, but also in Amazon tablets and Samsung Galaxy, and it's rumored to have them in Nokia's new window-based smartphone that should be released today. So it has a broad spectrum of smartphone products.
I don't like it.
Okay, there you go.
I don't like it, and I'll show you why. Again, it's just pure technicals here. Let's let price action dictate.
I think it has like 15% year-over-year growth potential, but okay.
Well, the stock's telling us that we're not approaching highs like we've seen over the last maybe 10 symbols we've looked at. Stocks are approaching highs, creeping up to that 52-week high mark. This stock isn't. It's sort of building a low-level base here. We peaked up here in early this year in the close to the $50 mark. Now trading around 35. If it gets above 40, I think it has potential to maybe start to creep back up again. But at this point, I'd probably be hands-off. Just doesn't seem as compelling as some of the other symbols we've seen.
All right, what about TriQuint? Trading at 6% discount to tangible book value here, and recently had some insider buying. Stock wasn't holding up particularly well yesterday. What do you think?
Doesn't look good.
Okay.
Just doesn't look good. I mean, the stock's sitting on lows, sitting at $5. As much as we like to buy cheap stocks, we want to believe in the story. We also have to respect what the market's telling us here, and there's been absolutely no buying. Any buying we've seen, even in early October when the market, took off, the stock went from 5 to 7, and, just a few weeks later we're back to 5 again. So there's obviously some committed selling here, and probably stuff you just want to stay away from until the story changes, whenever that might be.
All right, we got 5 stocks we want to just put on your radar for 5 ways to probably make some cash today. First off, Las Vegas Sands. Potential breakout here?
I am going to Vegas tonight.
Yeah, he is.
Las Vegas Sands. Interesting looking chart. And again, we're looking at macro time frames here. We saw a peak high, I think it was around 55 back in November of last year. We're sitting in a range for the better part of a year. We've been in a very, very tight range for a year. Probably best to wait till the stock breaks out.
What about BIDU? It was slightly higher on Tuesday.
BIDU, I like BIDU. It looks like it could potentially go higher. I'd be a buyer again on a breakout through 145, 147 area. I think that's where it becomes the most compelling. right now, just wait. These are very, very tough symbols to trade, very choppy, they've actually become a little bit more illiquid over the last couple of weeks. Volumes, decreasing. So I would wait here. I'd rather pay up a little bit and know that I have some sort of committed price movement than, being a buyer in here.
And what about Under Armour performing a lot better than LULU? Can it make new highs then?
Under Armour, one of these retail stocks, like you said, like LULU, really, really strong looking chart. Looks to me like it wants higher in the near term. Keep an eye on a breakout through 90 bucks.
And Priceline holding that rally after earnings, which is pretty impressive.
Priceline is a monster.
Yeah.
It's been a monster for a long time, flirting with a breakout in the 550 area, approaching 52-week highs again. Super earnings report, revenue, the whole nine. Keep an eye on Priceline. If this is, if you can handle the risk associated with trading a $550 stock, because the price movements can be pretty wild. Looks great.
And what about Schlumberger wrapping it up? Is this a stock that you really want to kind of bet on here?
Schlumberger looks good.
Yeah.
Schlumberger looks to me
Ready
like,
for a breakout?
if it can get above 77, 78, I think you could see a trade back into the mid-80s, even the 90s.
All right, great. So wrapping it up here, Evan, I just want to get your take on what the number one thing is you're going to be paying attention to this week, sort of in the market, fundamentally and technical levels, whichever one is most in the forefront.
Well, to be quite honest, as a trader, right now I'm all about risk aversion. I'm not committing any money. I'm not trying to catch a breakout. I'm not trying to catch a breakdown. The market will resolve when it resolves. I think smart money right now is hands off. I think it's a day-to-day type of trade. It's for short-term traders, the day traders, the 1 to 2 to 3 day time horizon type people. If you're looking to to be a buyer on a breakout, you're going to be better off paying up, knowing the market's really got committed volume, and we've seen that surge, and there's enthusiasm, and stocks are starting to make new 52-week highs again, than trying to anticipate it. Because if you're wrong, it can be a very punishing trade, as we've seen over the last few weeks. Gap up, gap down.
Right. That's your takeaway then. Smart money is hands off for now, waiting for that direction. All right. Well, happy trading, everybody, and good luck out there. I'm Alix Steele from the street.
And I'm Evan Lazarus. Have a great day.